Hello and welcome to Money Time at Money9. This is me Ajay and I'm here to take you on a ride for all the personal finance news that matters to your pocket and your life. First up, we have something on UPI on the cards. Well, what is that? The Finance Ministry has tweeted that companies should look at other ways of generating revenue from UPI services rather than levying charges on the customers. The Reserve Bank had mentioned in a discussion paper that companies which operate UPI services in the country should generate a reasonable amount of revenue. The government had provided financial support for digital payment ecosystem last year and has announced the same this year as well. The government has mandated a zero-charge framework for UPI transactions with effect from January 1, 2020. This means that charges in UPI are nil for users till further notice. Now, if you are a shopaholic and if you love buying branded apparels, then you must know that apparel prices can become costlier in the coming days. Apparels are made of raw materials like cotton, the prices of which have more than doubled in the last 1.5 years. In April 2021, cotton was sold at 45,000 rupees per candy. In August, cotton has been sold at almost 1 lakh rupees per candy. So, watch out, your favorite apparel brands can become even more costlier in the time to come. Well, looks like the government man can finally sense relief from high levels of inflation. Ahead of the festive season, staples and electronics have become relatively cheaper in the last 2 weeks or so. According to media reports, televisions of brands like Sony, LG and Samsung have become cheaper by 5 to 8%, while laptop prices have fallen by up to 2,000 rupees. Companies have also begun to offer discount in the range of 4 to 5% on smartphones. If we talk about staples, then edible oils have become cheaper by 15 to 20%, while large packs of biscuits have also become cheaper by 10 to 15%. Well, finally, after unprecedented rise in prices of essentials since the onset of the pandemic, we can finally see light at the end of tunnel. Hope retail inflation continues to ease out going forward. Up next, we have good news for IDBI Bank account holders. Customers of the public sector bank can now get higher interest rates in the range of 2.7% to 5.8% on fixed deposits of different tenures. Senior citizens can get additional interest rate of 0.75% over and above the applicable interest rates. But senior citizens can avail of the offer only for a limited period till September 30, 2022. The offer is also extended on 5-year tax saver FD as well. These interest rates are only available on FDs for less than 2 crore rupees. Now, if you have not yet subscribed to any sovereign gold bond scheme, then you can do so in the current week as the RBI has opened a new tranche for subscription on Monday. The issue price has been fixed at 5,197 rupees per gram of gold. You will also get a discount of 50 rupees per gram of gold if you subscribe it online. You can redeem it after 8 years. On Monday, gold traded at 5,193 rupees per gram. So, already you are getting to buy gold at a discount of 50 rupees. In addition to that, you will also get interest of 2.5% every year. You can subscribe to the scheme by going on your bank's website or in post offices on NSE and BSE. Next up, we have news for all those foodies out there. According to newspaper The Indian Express, Zomato Pro members will not be able to renew their memberships as the online food aggregator has altered renewable till further notice. Those who are looking to join the Zomato Pro club will also be unable to get the membership. Don't worry, Zomato is not winding up its operations. Rather, it is in the process to launch a new and better version of its membership program. Yes, that's right. Zomato had launched Zomato Pro in 2020. It would roll out discounts, cashbacks and loyalty points on food delivery for its members. Well, FIIs have again turned net buyers in India's equity market. We also FIIs made a net investment of nearly 5,000 crore rupees for the month of July 2022. But you will be surprised to know that already in August 2022, FIIs inflow of funds has grown by almost 3 times the net investment in July. FIIs have already invested close to 44,500 crore rupees in the current month alone. Now, let's see what analysts say on whether FIIs will keep on buying equities or not. Srikanth Chauhan, who is the head of equity research with Kotak Securities, has said that with fading concerns of rising inflation, tightening of monetary policy and performance of first quarter earnings, inflows are likely to improve in the emerging markets. Whereas VK Vijay Kumar, chief investment strategist at Geojit Financial Services, has said that the near-term trend in capital flows will be influenced mainly by the movement of the dollar. Well, after a long time, FIIs have turned net buyers in India's equity market, and all we can hope is that the trend only continues from here. Well, we have some more data from Amfi. According to Amfi, investors are abstaining from investing in debt mutual funds since October quarter last year. Ankit Yadav, wealth manager and director of Market Maestro, has said that interest rates will be the major factor to dictate flow in debt mutual funds in the coming quarters. Sandeep Bagla, CEO of Trust Mutual Fund, has said that debt mutual funds will continue to see net outflow until the interest rates stabilize. Generally, debt funds are considered to be less risky and provide better returns than bank fixed deposits. But due to interest rate upcycle, AUMs of debt mutual funds have taken a hit in the last 9 months. And up next, Deposit Insurance Credit Guarantee Corporation has said that it will credit back deposits of those bank account holders whose savings were stuck with 17 different cooperative banks in the country. The entity will credit back the deposits to the tune of 5 lakh rupees per account holder in October this year. The account holders need to furnish bona fides, alternate bank account number or Aadhaar linked bank account number and a written consent to claim their stuck funds with cooperative banks. The corporation automatically covers deposits for up to a maximum of 5 lakh rupees per account holder in all the commercial banks of the country. The depository entity is a wholly owned subsidiary of the RBI. And we end today's show with Cartrade's end of lock-in period. Cartrade share price on Monday remained stable at 643 rupees per piece. The 1-year lock-in period of anchor investors had ended on August 22, 2022. Cartrade was listed on the bourses on August 20, 2021 with a minor discount. On Monday, it traded 60% lower from its offer price of 1,585 to 1,618 rupees per equity share. Reportedly, anchor investors will get to sell 57% of net shares of the company. Well, that's all for today on Money Time at Money9. Do like and follow us on Facebook, Twitter and Instagram, and stay tuned to more news on Money9 English's YouTube channel.